Target reported a drop in quarterly profit and its 13th week consecutive quarter of weak or falling sales. But the retailer's new CEO has unveiled a turnaround plan, and investors appear to like what they are hearing. So let's bring in Michelle Connell, president of Portia Capital. It's good to have you join us.
Thanks, Lindsay, for having me.
Do you agree that this is probably good news for Target of a new CEO with a turnaround plan? What do you think?
Yes, I've been watching this stock for a while, and full disclosure, I do own it in several client accounts. The stock has done very well year to date. It's up 17%. I think the stock had gotten a little bit ahead of itself, and that's why you're seeing some weakness today. But long term, I think the new CEO is doing a good job of getting them back on track. They took up guidance a bit, which of course is good. Now they just need to start working on their apparel and some other areas of the store where they had differentiated themselves from Walmart, because that had been the issue, that Walmart had been taking their share because they've just been so competitive, and they had been more aggressive in terms of building out their AI supply chain.
Is that the biggest headwind you see for Target? Because you say they have a lot of work ahead of them. Is that mostly it, is differentiating themselves from some of the competition?
Yes, I owned this stock several years ago when I was a retail analyst. And, they were always really good when you walked in the store and you were just there for a regular shop and you were there with your family to buy groceries. Your eyes always went to their products, especially the apparel, which was really reasonably priced, for middle class and lower middle class families. And they've kind of had an issue in that area where they're just not having as much traction. But I think they're going to get there. It's just, it's wait and see. I'm encouraged that they did take up estimates. Their same store sales also don't seem as soft.
Okay, let's turn to Best Buy because it is down 7% for the year. Earnings were mixed. Stock is going up, I believe, today. Let's take a look at the chart again because I forget. But what are your thoughts on Best Buy? Yeah, stock's up by more than 6%. Thoughts on this company and their latest earnings report?
Yeah, they're down 7% for the year. And it's still a show me story. They're not as advanced in a turnaround. I don't even know if I'd classify them a turnaround. Their hope for this year is the electronic side of their business will start to pick up again because we're seeing more rollouts with Apple's mobile phones, and Nintendo has a lot of new products coming on board. So that's what most investors have been focusing on. But they still have a lot of weakness in the electronic sector. And we have to keep in mind that a lot of people are feeling pinched in terms of their budgets, and 40% of consumers don't have any discretionary income. So I don't know how many are going to go to Best Buy to buy the latest and greatest phone or Nintendo.
Moving on to MongoDB. This is an interesting story. The stock is crashing after Q4 results. What happened? Why is the stock going down so much?
I think it's getting totally crushed for two reasons. It's in the software space, right? So software in general is off like 30% if you look at the sector. And this stock, before this huge pullback, was selling at a 45 multiple on their forward earnings or on this year's earnings. And they've got a huge amount of competitors that are larger than them, Oracle, Google, and Microsoft. And so disappointing in taking their earnings or their estimates down for the year, as well as having an executive shakeup with their chief revenue officer and somebody else. I think that was just the perfect storm to say, you know what, I'm out as an investor.
It's interesting, like we keep having this conversation about which software stocks will maybe thrive because of AI or be helped because of AI, and which might be made redundant because of AI. What do you see happening with MongoDB?
I wouldn't own it. That's just me. I see so many huge competitors in that space, and I do own several software stocks outright because I feel that they have an advantage and that they are not going to be displaced by Anthropic. But I think this is one where I'm not willing to take the risk.
What software stocks do you like?
I like Okta. I'm cautious about ServiceNow and Salesforce. You had Anthropic say that several of the stocks that I just mentioned, they're going to use them in their plugins. So they're not going to be displaced. They're going to be working side by Anthropic. So I think investors need to really go through very carefully and see where the position is in terms of competition, because you're going to have some winners. It's not going to, AI is not going to take out all of software, but you have to be very strategic and careful and make sure that company is still going to be growing earnings 3 to 5 years down the line.
Okay, that sector aside, you believe now is a good time to invest in commodities. Is that right? And in particular, which kind of commodities are you looking at?
I like timber and I like metals. I like commodities because when you have the volatility like we're having now, that's the one area that's negatively correlated that holds up or actually goes up in value when the markets are being hurt. I like the fact that central banks are still buying more gold. And again, the volatility, anytime we have some volatility, and also the fact that we need more of these commodities to have build outs, whether it's AI data centers or in the States, and I think also for Canada, we need more homes to be built. There just there's not enough supply. So copper's used a lot in home building, and obviously timber is as well.
Interesting stuff. Okay, we will leave it there. That's Michelle Connell, President of Portia Management Capital, joining us. Thanks so much for your time.